Good afternoon, everyone. We'll let everyone have a few more seconds to get logged in since we did have quite a high registration number today. But welcome to the Provider Relief Funds. Where are we now? Our panelists today are Ashley and Tyler. A few housekeeping notes. If you have any questions for them during the presentation, please utilize the Q&A function. Everyone is muted and your videos are turned off. And with that, I will turn our time over to Ashley and Tyler.
All right, sounds good. Thank you, Amanda, and thank you everyone for joining us today for this Provider Relief Fund Where Are We Now update. So as you may have heard, definitely a lot of different things happening over the last, I would say, month and a half. And so we will touch on just some of those updates of, what is it that we now know today? And unfortunately, we wouldn't be a presentation with us if we didn't have some of those things that we still don't know. So we will cover those as well. Sorry, my screen's not moving here. There we go. All right. As Amanda mentioned, my name's Ashley Brandt Duda, partner in our Fargo office. Spend most of my time in our assurance practice, but also work significantly with the HHS Provider Relief Funds. And I'm joined by Tyler Bernier, who's the partner in our Oklahoma City office. And same as well, Tyler's one of our assurance partners who works extensively on the Provider Relief Fund side. Always have to add the disclaimer. Again, it wouldn't be a presentation with us if we didn't have the disclaimer. The information that we do have in here is current as of today, which is January 26th, if you are watching the recording. Please continue to be on the lookout for new information because, again, as we said, there's new updates, but there's also some unknowns out there and a number of things that we know HHS is going to be releasing more information on. So please keep that in mind as you're moving forward with this in the future. So the agenda for today, a few of the new things that we will touch on. First, we will give an update on the single audit addendum for the coronavirus relief funds that was released on December 23rd. And that will give you a good idea what to expect if you need to have an audit and what that will look like. We will also cover the portal registration that just opened on January 15th. Stimulus bill, the stimulus bill that was signed into law on December 27th, there were a number of items in there that had an impact on the provider relief funds. So we will cover some information on those as well. And then finally, the HHS reporting updates that were, again, just updated here on January 15th. We will go through the new changes with those. And so I will turn it over to Tyler to talk a bit on the Compliance Supplement Addendum.
Excellent. Thank you, Ashley. Like you said, quite a bit of change here in the last few weeks, starting right before the holidays, because the government does not like accountants. So they gave us all kinds of new stuff to read and digest and distribute at a time when no one else is paying attention. So we're going to cover a lot of those in case you were not aware of them or maybe overlooked them, because hopefully you were enjoying some time off with friends and family, or at least just a quick deep breath and break. And now we're back at it strong in January. So on December 22nd, the Office of Management and Budget released the Compliance Supplement Addendum. Think of this like the audit program for the single audit auditors. Basically, it outlines what needs to be done for single audits. A single audit, I'll remind everybody, is an audit of federal programs, and it's required when an organization receives greater than $750,000 and expends at least that much in the same fiscal year. So once you've met that threshold, you're now going to be talking to someone like Ashley or myself, and we're going to be digging deeper into those federal programs. Some of you nonprofit and government organizations are likely aware of this because you've had to deal with it before, but the for-profits may not be. So for the for-profit entities, when the Provider Relief Fund was released, they made the Provider Relief Fund, as well as the second one on this slide, the testing for the uninsured, subject to review for for-profits, which is highly unusual. Normally that doesn't happen. So what they did say, before I jump into what was in this addendum, was if you're a for-profit, if you already have an audit, you can have a single audit like a normal nonprofit or government would have. Basically, at the same time your financial statement audit is done, you'll have this compliance audit that's completed. You also have the option of a program-specific audit, and generally that happens when you don't have an audit. Maybe you have just a financial statement review or a compilation, or maybe nothing. Maybe your tax basis reporting. In that case, there can be a separate audit over just the program. And we're still kind of waiting to see exactly what that looks like. Again, that's been around on the nonprofit side and government side, but not necessarily on the for-profit side. So on the for-profit side, the one nice thing is there is a separate reporting area, regardless of which method you choose. So nonprofits and governments, they will report their data collection form, or basically the results of that single audit, to the government, and it's publicly available. For-profits will report directly to HHS. So again, a positive. So once again, back to this Compliance Supplement Addendum. What is it? So to go back in time a little bit, in June, the OMB issued the original compliance supplement, kind of, again, the program for how you deal with federal programs from an audit perspective. And at that time, they said, we're gonna have COVID funds, but we're not gonna tell you what to do with them for a little while, maybe September or October, possibly November, and it turned out to be December. So this guide is essentially an outline of how us as auditors will view this program when it comes time to test it, should that testing be required. Once again, $750,000 threshold. So for most of you on this call that did not receive that much in funding or will not claim that much in funding, then you can ignore the next few slides. But for those of you who did receive, let's start with there, receive at least $750,000 or expect to, because there's still distributions happening, pay attention. So this guide has a number of COVID programs, specifically though, the Provider Relief Fund, this testing for the uninsured, and then one potentially overlooked program, I just want to point out, this COVID-19 telehealth program, which went out to a lot of healthcare and nonprofit providers. This is a federal program, and it is something that needs to be identified if you did receive the funding. So within the Compliance Supplement Addendum, it outlines, as like I said, think of it like an audit program, what needs to ultimately be tested. So the nice thing is there are a lot of ends on this. The first area that will be covered, however, is the allowable costs and allowable activities. So basically, any of the uses of funds will need to be tested, as you would likely expect, right? How you're claiming things for expenses, how you're claiming things for lost revenues. And then the reporting aspect will be subject to testing. So again, likely expected, and we're going to be covering the reporting here in a few minutes as we go on through with some of the other updates, but that is going to be an area that's required for testing. So now, what probably matters for those of you that did receive that $750,000 or more, when are you subject to this single audit testing? So to start, it is based on this report that you will eventually someday in the near or long-term future submit to HHS via some portal. What you report on that portal is basically what you're going to be claiming on your schedule of expenditures of federal awards, or because we like to abbreviate everything, the CFA. So we'll be talking about the CFA, that's what we're talking about. So if you are a fiscal year end before December 31, so if you're a June or September, even if you recorded millions of dollars of revenue on your financial statements, you will not report anything on your CFA. If you're a December 31st all the way through a June 29th, then you will report on your CFA the amount that you're going to put in this first HHS report. We're fully expecting that for next year's Junes and Septembers, etc., it's going to also be based on this reporting. But just because we like to be fully unclear on things, the Office of Management and Budget basically said, look to next year's guide, which will hopefully be released in June as to how to report that. But once again, fully expecting it'll be based on the reporting that's going to be due, at least the December one, probably the June on top of it. Within the Compliance Supplement Addendum, and any one of you can pull this down, this is available online. I did find this interesting, it's worth pointing out. And the reason that I point it out is, as we've been talking about, and if you followed us down this long path that we didn't expect to be, 9 months into, as Ashley and I have been providing these presentations, one of the main takeaways is always, you need to document, and you need to track, and you need to put your position down. Why are you claiming amounts to this program? And more specifically, what guidance are you using as a basis for that? Well, if you actually have that in place, according to the Compliance Supplement Addendum, as long as you were following guidance in place at the time, then it's going to be considered allowable, at least for our testing. And when I say R, I mean the CPA testing. Now, you still may be subject to testing from HHS or the OIG, but I do think any documentation or support you can have for your position, and again, tying it back to something that's been released to date, just makes your position that much stronger. So some other considerations for the single audit side. First off, if you are a June or other year end that has an original due date for your single audit of October 1st through June 30th, you got a 3-month extension as long as you had COVID funding. So if you still have your audit open and you're fretting over that, normally there's a 9-month period. There's an extra 3 months tagged onto it. No approval required. The other area, generally overlooked, so to be aware of before somebody's asking you this question, there is a requirement within the notes to your CFA to disclose the amount of PP&E, personal protective equipment, not property and equipment. So the gowns, face masks, goggles, anything that's covering you and keeping you protected, that you need to disclose the amount of PP&E received at a fair market value. How you come up with that fair market value is up to you. So definitely something to pay attention to. Again, not a high risk area, but if you can accumulate that information early, it's obviously going to help. So portal registration, rolling on into our next topic area. We have all been waiting for that magical date of January 15th when HHS said they're going to open the registration portal. And the report was going to be due by February 15th. And January 15th came and hallelujah, the portal opened to register for the portal that will open in the future. So when you see this and when you've gotten communications on a portal being open, this is the registration component. So what does that mean?
All right.
Well, it means that you should look to registering because you're eventually going to need to report through some similar portal that you're going to need this login and other information for. What HHS has said was that February 15th deadline has been delayed, and HRSA will announce the timeline when it's available. So seemingly February 15th gets pushed off into the future. How far, we have no idea. What are some of the pieces of information that you're going to need for that portal? Well, here you go. So you're going to need your tax identification number, business name, etc. Kind of some of your demographics. Another thing that you're going to need is payment information for any one of the various provider relief fund payments that you receive, just to verify that it is truly your organization, kind of HHS's verification process. I should also mention, as noted at the top here, you will only need to register for this portal if you received over $10,000 in the aggregate. So in the aggregates across any receipts that you've received to date. And then a final note at the bottom, because I have heard of some instances of people having issues with the registration portal, make sure you have the most current browser of whatever browser you're using. So a lot of the older browsers are just going to fail out or blank out or spin, is what I've heard on all those cases. If you log on to the HHS portal registration site, there are a number of FAQs. So the FAQs provide information as far as what is your reporting entity. We'll talk about that in a second. What information do you need? What is this that we're even talking about? What if you have multiple entities? So be sure to check those out because they're actually pretty good resources over this registration process. Again, they kind of created a step 0 before step 1. So we are going to have to go in and register. So when should you register? Is there a deadline? Not that I'm aware of, but clearly you're going to have to register before you report. So I would say before that point in time. First off, did you receive at least $10,000? Are you planning on returning all of the funds, not just some? So if you're going to return them all, why would you report? You probably don't need to, but if you're going to keep some, you're going to have to. Even if you received over that $10,000, or especially if you received over that $10,000. What distributions did you receive? This is important because it helps to find the reporting entity if you have multiple entities within your structure. It's also important because there are certain distributions that are not covered under this report. So the nursing home infection control distribution, as well as the rural health clinic testing distribution, are not subject to this reporting, and neither is the testing for the uninsured. So that's the program where you could go in and register and bill for and collect Medicare rates for uninsured patients that you treated for COVID. On the reporting entity side, and we'll cover this when we get down into the reporting aspect, but there are differences depending on whether you receive general distribution funds, targeted distribution funds, who ultimately spent each of those funds, where they were kept, etc. And then, have you accumulated all your registration information? All that stuff I just covered on the last page. And if so, why not? I honestly don't see a reason why registering into the portal should not be done early. If anything, I honestly think that it will enable you to receive more timely information directly from HHS or from HRSA, the organizations that are monitoring and kind of overseeing this this specific federal program, instead of waiting for the emails to come from us or the many other different contacts you have. So if you haven't yet, I would encourage you to take a look, accumulate the information you need, identify those reporting entities and how you're going to eventually report, because that's a key piece before you just jump right in. And then again, I honestly don't see a reason why you wouldn't need to. Ashley?
All right. Well, next thing we'll talk a bit about, as I mentioned previously, the new stimulus bill that was signed into law on December 27th did have a number of provisions that are applicable to the Provider Relief Fund. And so I think what's important here too, when we're talking about the stimulus bill versus the reporting requirements that we will cover in more detail later, is that we have to remember that this is truly the law. So going forward, obviously HHS can provide interpretations to this, but the fact that it is in the stimulus bill really does help some of these provisions that are more beneficial to providers as they are truly signed into law. So the first one that had a pretty significant impact was some provisions related to the lost revenue calculation. And so if you remember back prior to the stimulus bill being signed, the current guidance on lost revenue was that you had to do a comparison of 2020 revenue back to 2019 revenue on a calendar year basis. And so essentially it really didn't provide any leeway for changes that you might have as an organization that really don't make that comparison from one year to the next really an accurate representation of what you had as lost revenue due to coronavirus. And so in the new legislation that came out, it said essentially that you can calculate your lost revenue using the frequently asked question guidance that was released back in June of 2020. And so that's all the legislation said as far as that piece. But if you remember back to June, the guidance that was out there at that time was that essentially providers could use any reasonable method to calculate their lost revenue. And as I said, we'll take a look at the reporting guidance here and discuss a bit more on the details of what that actually looks like. The other part that they did specifically put within the legislation was that providers can use the difference between budget and actual. They did, however, note though that the budget must be approved prior to March 27th of 2020 if you're going to use the budget to actual consideration. And so that brings about some unique considerations, like I said, we'll discuss as we move forward here. Other thing that they noted was on intercompany type of transfers. And so they said that any payments to a subsidiary of a parent organization may be transferred to any subsidiary eligible healthcare providers of the parent organization. And this includes targeted distributions. And so you'll see there we have that subsidiary eligible piece in quotes because we do think that this is important and likely an area that is going to need some more clarification. Because the question comes up is, what do they consider to be an eligible subsidiary? So in order to transfer that targeted distribution, does this need to be to a subsidiary that otherwise would be eligible for that distribution, or can you just transfer that distribution openly within any levels of the organization? That's one piece that we're not entirely sure on. It did note, however, one thing to keep in mind as we're talking reporting is that even if you are making transfers of these targeted distributions, that the reporting stays with the original recipient. Also within the legislation, it was noted in there that HHS is required to submit a final report on their audit findings within 3 years of the final payments being made under the Provider Relief Fund. And this report must go to Congress. And so really why I think this is important for everyone to be aware of is, of course, if they are looking to do this report on audit findings and they have this 3-year window, I think it's fair to say that for 3 years, you should certainly be prepared that you could get audited at any time and to really have that documentation available should you be audited. Also, as part of the legislation, there was discussion of an additional phase of funding. And essentially that phase of funding, there's an additional $3 billion allocated for additional future programs. And it also specifically said that they need to use 85% of the unobligated balances and any funds that have been recovered from providers. So you're hearing of those providers out there that are deciding to return some or all of their funds. So this would be included in that bucket as well. And this will be an application-based phase, and it will consider your final financial losses and any changes in your operating expenses in your 3rd or 4th quarter of 2020 or here in your 1st quarter of 2021. So if you've had losses here toward the end of 2020 or the beginning of 2021 here, certainly something to take a look at when additional information comes out on this phase 4 funding. All right, and now I'll turn it back over to Tyler to kick us off on the discussion on the post-payment notice of reporting requirements that was updated on January 15th.
Sure, maybe since we're near halfway point and probably halfway through the Bernies, how about we knock out a couple of questions there, Ashley?
That works.
All right, so Some of these we'll punt to the future because we do have slides available. So the first one listed as, have there been updates on capital expenditures and guidance around definitions of non-financial data? Stay tuned, we got you covered. Next one up, will my current HRSA login work for this portal?
And I don't believe that's the case. I think you'll need to create a new login here. So
I believe you're correct. I would have to verify from that FAQ, but my understanding is everybody needs to register to log into the portal regardless of whether you already have a HRSA login or created one through an attestation program or phase of receiving funds or applied for additional funds. So I believe it's kind of a new registration process for everyone. And that's kind of why you need to confirm the specific payment you received, because I do think they're trying to identify specific accounts with reporting entities. So I think I kind of covered this, but Ashley, and we'll probably provide more. Do you suggest we wait to register if we don't know yet if we'll be reporting as parent sub or by EIN, depending on further clarification on those items?
well, I think at this point, at the very least, you could certainly register on the parent side. As Tyler said, I think just the benefit of registering is that if additional information is pushed out, you would certainly be privy to getting that. Also, though, something to keep in mind, because of the legislative clarification where it did say that the reporting is going to be essentially, even if you transfer a targeted distribution that a subsidiary has attested to, the reporting is still going to stay with that subsidiary. So if you do have subsidiaries that have specifically themselves attested to payments, they are going to be eligible and be required to report. So I think it's certainly something you could get that process going. I think really the sooner the better.
And I do think in a few slides here, we'll talk exactly about what Ashley's referring to, how you define that reporting entity. And I think that'll hopefully help clarify things. So along the same line, should you report at the parent level, even if the parent didn't receive funds? Again, we'll cover that in a few minutes. It probably depends on your organization and how they were used. Can multiple staff per TIN register on the portal?
I do not know the answer to that question.
I don't believe you can. You need to have a primary registration and a single individual as the point of contact. That is the individual that you are including as the kind of main person. So when I went through that listing for registration for that one reporting entity, that would be your initial page. So I do believe it is only one per specific reporting TIN. What about for those with fiscal years ending 6/30 or 9/30? What do they do for the second fiscal year end budget since it wasn't approved prior to March? I think we'll kind of cover that here.
Great question. Yeah. Yeah, that's coming up.
Stay tuned. Maybe if we knock out a couple more and then keep rolling. Can you clarify, we have a 6/30 fiscal year end. We should create an account on the portal, but don't yet have to report on how we use the funds for that fiscal year. Just anything used in fiscal 21.
Just to clarify on the reporting, so the reporting is on a calendar year-end basis, regardless of your fiscal year-end. So even if you're a June 30, September 30, whatever it may be, you are still going to have to report on a calendar 2020 basis. So in that case, we would still suggest that register for the portal, and essentially you'll still have to report for that time period.
Yep, so I've tried to explain, think of this kind of like 3 buckets, right? You have your financial statements and your kind of normal life. That's your fiscal year. You then have the HHS program and how they require you to report on it. And that's kind of here. And then you're going to have the single audit time frame, and that's kind of going to be over here, and that's the unusual one. So your fiscal year is your fiscal year. How you report that, your financial statements, how you reflect revenues is all going to be based on your fiscal year. how you report to HHS is, for this first report, all based on your calendar year, regardless of what entity or individual you are. So the dentists, the physicians, the hospitals, the nursing homes, the behavioral health organizations on this webinar will all be reporting 2020 calendar year information. Then when we get to the single audit, it's kind of like a combination of the two, right? So you use that HHS reporting calendar year period, and then you apply that to your fiscal year. So that's how the single audit will work. All right, last question here. We received a PPP loan that will, assuming it's fully forgiven, take the lost revenue calculation off the table for us. I assume the question is, will it? And the answer is, wait and see. All right, so let's keep rolling. I know questions keep coming in as we fully expect. We'll try to get through as many as possible. However, as you could tell, a lot of your questions hopefully will be somewhat answered, or at least you'll have some indication that we do not know as we kind of round out the back half of this. So in addition to the stimulus bill and the reporting portal and the single audit compliance supplement addendum, if we couldn't have enough fun information, HHS released a new version of the reporting requirements document. Think of this as the outline to what HHS will eventually want. It was dated January 15th, so it was released in conjunction with that registration portal. As I previously noted, it does not include specific distributions, the nursing home infection control or the rural health clinic testing. It also doesn't include that testing for the uninsured program. So specifically, the rural health clinic testing is done through a separate reporting mechanism that you're already likely doing. And the nursing home infection control, they said, wait for more info and we'll tell you what we're gonna want. So I'm excited for that. The other thing that the reporting requirements document did, and probably the biggest reason that it was updated, is it incorporated the newest elements of the stimulus bill that Ashley had just covered. So when the stimulus bill got passed, that went into law. You can't change law. Congressional action takes precedent over HHS requirements all day, every day, right? So when there is a conflict, law wins. And this report, therefore, needed to be updated. So the report, we've already mentioned this a few times, register early. When the report comes, it's important. And it's important because it is going to basically be the support for the amounts you're claiming. Think of this like your tax return for the provider relief funds. It is going to be you submitting the information to show how and why you used it and why it was appropriate under the terms and conditions. It will be the basis for determining whether that single audit or federal program audit's required. And it will also, most importantly, be the basis for any subsequent audits, such as OIG, HHS, etc. So this is really going to be the base for everything that comes in the future. Unfortunately, there's not going to really be an approval of this report. So while PPP, for example, you submit to the Small Business Administration and they give you a stamp of approval and you walk away happy, you won't get that here. That's why I use a tax return as kind of my comparison. Because just like a tax return, you submit it and then you wait and hope you don't get audited in the future. As Ashley mentioned, the 3-year reporting period noted within the stimulus bill gives us some indication that's likely your risk period. The frequently asked question document also has the 3-year retention period, so kind of follows the same time frame. So what's going to be reported? If you've heard us talk before, or if you have pulled up stuff from the HHS website, then you have already seen most of this. Demographic information, the healthcare related expenses, lost revenue, but there are some changes. So as we go through this, pay attention. Don't just completely block it out because you've heard it before. So the first up, because this was a number of questions that came through when we talked about registering. What is the reporting entity? So how do you determine who received the funds? HHS has broken this down into a number of different categories. So you can see here, it's organizations that potentially only received the first payment. It's those that received only general distribution payments, but throughout the different phases. It's those that potentially have subsidiaries or parent organizations, and those that receive targeted distributions. So as we go through this, what you'll notice is the general distribution effectively can be reported by either the organization or the TIN that received the funds initially, or the TIN that used it, if it's kind of a subsidiary or related party relationship, or by the parent. So there is a choice between where these funds will ultimately end up and be reported, who's going to report on them. The targeted distribution payments, however, need to be reported by the entity that received it, regardless of who used it. So Ashley noted earlier that that targeted distribution amount can be transferred to eligible subsidiaries. So still true. You can go from one critical access hospital within a system to another, for example, or one nursing home to another. But the original recipient, the TIN that attested to those funds, will need to report on the use of those funds, regardless of how any of the other funds are being reported. So you may have a situation where you have multiple entities reporting on different components of funding that you received. So we'd recommend laying out the different distributions you received, identify those that are general and those that are targeted. The general, figure out who's going to report on them, who ultimately used them or who originally received them. And the targeted is really, again, going to be who originally received those funds. So once again, when there's related entities, that parent, if there's a parent with subsidiaries, the parent can report on all of the general distribution funds used throughout the organization. The subsidiaries can report on those that they received or those that they used. And that doesn't matter who attested to it. So assume you have 3 organizations and all 3 of them receive different pieces of the general distribution. The parent can report on all of them, or you can report on each 3 separately. Once again, targeted must be by the original recipient, however. Then in the second category, so there's the demographic category, there's now 5, it used to be 4. So in the second category, they just created this new one of additional provider payment information. If you invested your PRF funds and earn interest on them, then that interest must be reported. So start tracking the amount of interest that you received and earned during that 2020 calendar year. And to clarify, or once again point out, the interest received must also be used in accordance with the terms and conditions. So if you received $1 million, you earn $10,000 on that million, you're going to have to claim $1 million and $10,000 and show the expenses and lost revenues attributable to that. Lost revenues. All right, Ashley, is this you or me? I forget already. Maybe it's because I don't want to keep going.
It's you.
All right, so this is the bane of all of our existence. This is the area that has continued to change. We started way back in the day with this concept that was brand new. And what do we even consider? And then we got to September and they completely changed it on us. And then October and we changed again, and we keep going. Luckily, the stimulus bill put in some more options available, and therefore HHS had to update their guide. So here is where we sit today. You have 3 options available. The first option, you can compare your 2020 calendar year patient revenue to 2019 calendar year. Very easy. Again, regardless of your fiscal year, this is calendar year information. If you do select that method, you're going to need your 2020 and your 2019 patient revenue information by major payer. So make sure that you're starting to accumulate that information. Second option, you can compare your 2020 calendar year patient revenue to your 2020 budget. Should say 2020, not 2019. So compare your budget to your actual. So long, as Ashley said earlier, because of law, that budget needs to be approved by March 27th, 2020. So, Ashley, here's a question for you before we ultimately get to the question at the end. I'm a June 30 year end, and I approved my budget back in 2019. But of course, I didn't approve my fiscal year 21 budget until June. So I'm gonna have half a year that has a budget that's in accordance with this and half a year that isn't. What do I do?
Good question. I think it's pretty clear, of course, on the first 6 months of the year, because that would be the piece that, of course, was approved prior to March 27th. So pretty straightforward. I think it's, of course, that last half of the year where really the guidance is not clear as far as can you use that budget, because of course it was approved after March 27th, understandably. I think something to take into consideration, which is the piece that Tyler will be talking about here next, is if you are in that situation, I think certainly you could incorporate this any other reasonable methodology piece. So you could still use a comparison to budget, but as you'll see on our next slide here, is that when you do that, there's definitely some more considerations and documentation that you need to utilize. So I think certainly an area that we'll hopefully see more clarification on.
Absolutely. So once again, 3 options. Now you get the third bucket. What's the third bucket? Any other reasonable methodology. So that's the key word. It doesn't need to be deemed reasonable by you. It needs to be deemed reasonable by HHS. So once again, to kind of clarify, and again, you'll get copies of slides, comparison to prior year, exactly what you think, using whatever standard basis of accounting that you would otherwise normally use. Comparison to budget, whoops. Again, that 2020 March 27th approval date, so that's obviously a concern for many. And then if you do choose this method, you will also not only need to submit your budget, you're going to need to submit an attestation from a C-suite or related similar type individual regarding that budget and the timing, accuracy, and approval of it. So the alternate methodology, again, HHS needs to deem it reasonable, not you or I or Ashley or anybody else. So that's the important thing to understand here. So what do you actually need to identify? How do you support that? And what HHS said was, here's what you're going to need to submit. You're going to need to describe the methodology that you're using. You're going to need to provide the calculation of that methodology clearly. You're going to need to, probably most importantly, include an explanation of why it's reasonable in the eyes of HHS. And then finally, and probably maybe the hardest barrier to overcome, because this could be difficult at times, you need to have a description establishing how that lost revenue was attributable to coronavirus and not anything else. So there are a number of things that you're going to need in order to support or substantiate this alternate methodology. And HHS did specifically identify that you will face an increased likelihood of an audit if you use this methodology. It did, however, and while you might view this negatively, I view this positively, say if HRSA or HHS does not find it reasonable, you have 30 days to provide one of the first 2 methodologies as support. So it's kind of like a pass, go, free pass, right? I mean, you kind of get your first stab at it according to this, because the worst that happens is you go back to what you would have had to do anyway. I would say if you don't think it's reasonable, I would not go down this path, because there's no use going through all the work. If you do, make sure you are focusing on those 4 things and having a decent description of the methodology and explanation that probably you run by other people to make sure that they view it and say, yeah, that actually does make sense. So what are some of the methodologies? This is not intended to be a list for you to pluck things off of, but potentially, could be if it makes sense for your specific situation. Comparison to a forecasted calculation of 2020 versus a budget. As you can see at the bottom, what Ashley was talking about, if you have a partial year with an approved budget and a partial year with not, it seems like this is the case where it fits into. Adjustments for identified changes. I know many providers that expanded services, hired physicians, opened practices, closed practices, did all of that had nothing to do with coronavirus and should be taken into consideration when calculating this. Excluding the period before the pandemic. So rather than the full calendar year, why not start in March? And that seems like an easier explanation as attributable to coronavirus. So that might be a potential option. So you can see the other ones identified. Again, the door's open, but it does still have to meet that reasonability threshold from HHS. Expenses, Ashley, take her away.
All right, sounds good. Next reporting element within the reporting requirement is the expenses. And you'll see a couple of the items here are things that actually did not change from the previous guidance, but just because they are so important, there are a few things that we do just want to essentially touch on again as reminders for everybody. And so within this expense section, it says that recipients will report on the use of their provider relief fund payments by submitting healthcare related expenses that are attributable to coronavirus that another source has not reimbursed or is obligated to reimburse. And we'll talk a bit more about that as well. So that's a very important point that's going to be emphasized. And so you will be required to break your healthcare or your coronavirus related expenses into two categories, and that's general and administrative and healthcare related. And so would really, as you're starting to compile your expenses together, I would really recommend that you actually take a look at the reporting guidelines and the categories of expenses that they do have, because some of the things where they're placing them between G&A and healthcare related is really not what we would consider to be intuitive. So I think just use that document as a reference as you're starting to think through and prepare to do your reporting. The changes that did come about within the new reporting requirement document, there were a couple of them. The first one is that seems pretty straightforward, but they did want to clarify, is that in the definition of expenses, they did actually add the terminology where they said attributable to coronavirus. And really reason being there is that some of the expense categories themselves are really quite broad. And so it seems here that they really wanted to emphasize the fact that, okay, you need to make sure when you're claiming these expenses that they truly are attributable to coronavirus. The other change, which didn't seem like a huge change, but really is very interesting and could have some impacts for a few providers, is they did remove this discussion of the concept of maintaining healthcare delivery capacity, which includes operating and maintaining facilities, etc. And so the initial question, of course, that was in the verbiage, and everyone said, okay, so I can claim really just any expenses I had to maintain healthcare delivery capacity. And so it was really starting to open up a lot of questions of, okay, you're claiming the lost revenue. Let's say you're a clinic and you had to significantly decrease your volumes or shut down temporarily. Well, in that case, they said, well, you can claim the lost revenue and these expenses. It seemed like you were doubling up. So I think just really clarifying there, maybe some confusion as far as what can be claimed and what can't. Next item here, as I mentioned, the expenses attributable to coronavirus that are not reimbursed by other sources. Again, this is not a new concept. This has been in the guidance from the beginning, but really just wanted to touch on it again because we do consider this to be so significant. And so in the new reporting guidance, they still do note that you can report your actual expenses incurred above and beyond what has been reimbursed by other sources. And just to keep in mind here, when they're saying reimbursed by other sources, that's not just other coronavirus related grants, that also you need to consider your payments received from insurance, from patients, any other payments received. And so it's really, they're trying to get down to this true concept of what were your true marginal increased expenses that were related to coronavirus. Other item here that again is not new, but just wanted to clarify because this did change at some point throughout the fall, is really when you're looking at, so we've discussed the lost revenue and we've discussed the expenses, and they are really considered to be two separate calculations. At one point, there was some netting involved, things like that, but really keep in mind, these are two separate calculations, so you will report on your lost revenue and your coronavirus related expenses without needing to net those two together. Also within the reporting, there were some additional items that come after the expense section that you need to complete here. And so just some things to keep in mind, because some of this, you know, it seems like it's not a lot on the surface, but when you really start looking at it and start looking at the fact that you need to report it on a quarterly basis, it really just is a lot of information that needs to be put together. So something to really start looking at early. And so first one here is just some different metrics that are required. So personnel, some patient metrics, excuse me, and then facility metrics. And so again, just keep in mind, those are all on a quarterly basis. So you'll need to start looking at how you can gather some of that specific information. If you did have any changes in ownership throughout the year, you will need to report those as well. So if you're an entity that's had some of those, something else to be thinking about. Other assistance received is required to be reported. And while this is not a change, it's actually quite interesting that this previously used to be required to be reported right within the lost revenue section of the reporting. They've now pulled it out of the lost revenue section. And so that does bring about some questions of, okay, does it still need to be included as revenue? Is there a reason they pulled it out of the lost revenue section? There is a frequently asked question out on the HHS website, which is from several months ago. But that still does say that your other assistance received does need to be included as revenue for purposes of the lost revenue calculation. So I wouldn't get your hopes up too much on this, but it's something that we're watching closely because it does seem very strange that they pulled it out of that section. Other item that you'll have to report on is any transfers of targeted distributions. So as we've talked about a bit, you are now able to transfer those targeted distributions to other eligible subsidiaries. They do, however, note that in addition to having to report it, that if you do have transfers, that this is another area where you will face an increased likelihood of an audit by HRSA. So if you do this, I think just make sure that you're documenting it well, documenting reasons for the transfer and the proper usage of the funds. And then you'll also have to report on your single audit status. And so this is one I would definitely recommend that you work very closely with your auditors on, because you will not only have to indicate if a single audit is required, but you will also have to note specifically if your auditors have selected the provider relief funds for testing. So again, make sure you follow up with your auditors, I would say, prior to completion of this report. Just a reminder too, we talked a bit about the other assistance received and how that needs to be included. These are some of the items that they have specifically identified as other assistance received. And so you can see there at the end, there's the, blanket any other assistance. So just to keep in mind, be thinking through any other coronavirus type assistance that you've received throughout the year and make sure that you're reporting on that. Okay, so we have now covered all of the reporting requirements, all of the new information, and really what is it that we do know. And so this is where we get to the fun part of the presentation where we can tell you everything that we still don't know. And I guess the hope is one of these days we are going to know all of it, but we're not there yet. So
Ashley, do you ever watch SNL?
I do.
Have you seen some of the more recent ones with Dr. We Notice?
I have.
That's exactly what this reminds me of.
That's actually true. We could could start a little skit on that, I think. This is good.
So what's the first question?
So first question, and this is actually a question that I receive this question all the time, and I really wish I had an answer, is if you received PPP funds, is that included in the calculation of lost revenue? And if so, is it when it's received and when it's forgiven? And I know I slightly touched on this like with the lost revenue calculation, but I don't know, Tyler, if you have any additional
We do not
great
notice.
thoughts on that.
We do not notice.
Yeah, and that of course is one of the big questions out there, because of course this has a significant impact on many providers, because most of course receiving those PPP loans within 2020, and so if it needs to be included there, obviously would have some significant impacts. So hopefully we'll hear more information on that. All right, so next one. What should be included or excluded from patient service revenue?
We do not notice. So yeah, we could keep going. Here's the problem. As was said a few times, there's a lot more guidance that's still likely to be received. And unfortunately, even what has been submitted, because of a lot of the other different changes, there's conflicting guidance. So I can point you to 2 different pieces of information on how to report the same specific item, and they will conflict each other. And neither one is in the stimulus bill, so neither one is law. And that's what makes this all the more difficult. And that's going to be the piece that we need to figure out and wait for the actual true reporting to come up with. So rather than go through the whole fun and games of all of these, we can flip through them quick and maybe hammer out the last questions or some of them that are in the Q&A as much as we can within the last few minutes. But as you can see here, there's a lot of specific things like, can you include the COVID update meetings and all the time the C-suite people are spending? If you're a cost reimbursed entity, how do you calculate that? Do you need to reduce your Medicare share by that amount, and how do you calculate it? Income taxes. If an organization pays income tax on the income earned from PRF, it is an allowable expense. What if you're pass-through? Your pass-through, you're not paying tax, right? So the owners are paying the tax. So if you make distributions for that tax payment, is it allowable? This one we get a ton of constantly, and I'm sure there's a ton of these out there. If you don't complete a project by June 30th of 2021, is it allowable? Are some pieces allowable? What if you prepay items? What if you've paid for them and already kind of gone through every process, but they're delayed because of shipping or production or all of the other pandemic related displays? And once again, we do not know this. And that is frustrating. So with that, we'll see if we can hammer out a few more questions here. I know there's a lot of them. The number of questions rolling in both in the chat box and the Q&A makes me think we probably need to almost do a town hall type session that we did before, where we just get hammered left and right with questions and see what we can take away from it. But with that, let's see here, Ashley. Can HERO quarterly bonuses still be covered under CARES Act funds?
I would say yes to that, because again, it's an additional incremental expenditure that you would not have had previously. I think the main thing you would want to make sure that you document there is specifically how it's related to coronavirus and the fact that it's not reimbursed elsewhere, and then essentially document the reason for needing it. So is this considered to be hazard pay? Is it more of a retention type bonus? I think really just if you can document those types of considerations surrounding that, it certainly seems like it would be an appropriate expenditure.
Excellent. Let's see here.
Yeah, I know, Tyler, I know there was one too, and I did answer it in the chat, but I think it's a common question, is someone had asked about when you were talking about the single audit, and they had asked about PPP funds and if those needed to be included for single audit purposes as well. And so I think be a good
And
one to
those-
address with how common they are.
Those PPP program has been identified as not a federal program, so it is not subject to single audit. Again, the testing for the uninsured, so if you signed up through the HHS portal, that is a program. If you received funding through the EIDL program through SBA, so there's the PPP is common, but there's EIDL as well. EIDL is considered a federal program. So be aware of that. Those are probably the more common ones that we're seeing out there.
Absolutely.
I think I covered there's one in here, unspent money deemed taxable. Can I report income tax expense? Yes. For the PRF, is it still incremental costs only? And I think we kind of covered this a little bit in that we aren't fully aware, but the specific example is salaried CEO attends 3 hours a week of incident command for 52 weeks, which is COVID related, but part of his salary.
Yeah, and I would say, as you mentioned, I mean, certainly some uncertainty surround that. You know, I think the concern that I have is, while it would be great if you could claim all of those expenses, just the discussion that they have about essentially additional expenses related to coronavirus and can't be reimbursed by another source. I think it would be hard to say, since that salary is really not changing. That's where I think it would be very difficult to get there, because assumably they would consider that to be a normal expense. You're still having to pay your CEO, your CFO, what you would have paid them previously. So I hopefully they open up a window there, but I do have concerns with that, where I think it would be difficult to claim.
And we have somebody asking to clarify, most of what we talked about was for providers receiving less than 10,000, and yes, it is. I will note, if you received funds under the Provider Relief Program, you're still subject to all the same terms and conditions and uses. You're just not going to need to report anything to HHS if you receive less than $10,000 in the aggregate. So again, that means across any distributions. And once again, the federal single audit threshold is $750,000. That's not received, it is used. So it's amounts that are received and claimed and used. And I know we're running up against the time here, but I got one question I do have to ask you, Ashley, because it is out in the Q&A. Does materiality play into the interest earned calculation?
I would like to say yes, and it maybe does
thanks,
for your
Mitch.
financial audit purposes. Yeah, I did see that. Thanks, Mitch. I would say for purposes of HHS, they probably don't have a concept of materiality. That being said, I guess it's how much risk you're willing to take. But like I said, I don't think there's any specific materiality concept for them.
Agree. Well, we appreciate everybody joining. Again, we know how frustrating this is. We hope this provided some additional information for you. On the next slide here is our contact information, so feel free to reach out. We try to answer as much as possible and as quickly as possible with everything else going on. Amanda, anything else that you need to let everybody know?
No, just a quick reminder that the presentation deck along with the recording will be emailed out soon.
All right, thank you very much. And hopefully one of these days we'll be through this all, but we appreciate everybody's involvement along the way and all the efforts that you're doing to help not only through this program, but clearly you're on this because you're providing some patient care. So thank you to all that work that you're doing to kind of help us through this difficult time.
Yes, thank you, everyone.